Happy Wednesday, everybody. I am here with our Wednesday lives for my group and my business page, and I'm on YouTube. So, for those of you that are tuning in, hopefully you can hear me. Every week we worry about any tech glitches. So, if you are online watching one of these video streams and you can hear me, if you just drop a hello down in the comments, I would appreciate it very much. And so, welcome on Wednesday. I am Christina Springstead. I am owner and founder of Springstead Solutions. I focus on helping small businesses become permanently profitable, provide profit advisory services, bookkeeping services, and bookkeeping support services for those who are out there. Also working on becoming a digital course creator and doing all the fun things to help small businesses find a way to survive. So welcome here. If you guys all saw my post and lots of you join in later, that's great. Make sure to leave comments down below. But today, kind of moving into the new year, and you guys are all getting ready for tax time. I know a bunch of my clients are. One of the things I want to talk about is paying yourself as an owner when you're a small business and how to do that. It's a new year. You're about to file your taxes. You're about to get your personal report card and how you did being a business owner. And it's a great time to look back at last year. What went really well for you? How did you feel about how things were? Do you have some wishes? You think things were different? And through all of the work that you did last year, do you feel like you were compensated? And is your business moving in the right direction, right? Because that's the American dream. We open up our businesses and we become business owners and we're able to make a decent living and support our families and all the good stuff. So I wanted to talk about owner's pay, draws, how do you pay yourself, just all the good things around making sure that you're in line with what your goals are. So as most of you might know, I am a Profit First certified professional. So if you guys have read the book, I found this book last year, fell in love with it as someone who's ran a small business for well over a decade. Lots of principles within the book were wonderful. I decided to get certified because the book is great. And to me, I call it the training wheels for small businesses. So you're wanting to get some cash flow under your belt. You love the idea of getting, paying yourself first, taking your profits first. That's what we talk about at Profit First. And we focus on the profits of your business, paying yourself so that you can sustain this business and the dream and the passion of what you went into business. So I wanted to talk today about owner's pay. This is something I work on with my customers and my clients who are running the small businesses. And there's lots of theories and lots of input out there about owner's pay and how do you pay yourself and when can you pay yourself, and just lots of information out there. And some people really don't understand what that looks like. So in Profit First, we work off of allocation. So if you've read the book, your profit minus, or your sales minus your profit equals your expenses. And within that whole system, part of what we focus on is owner's pay. So making sure that when your income comes in on your allocation days, and if all this is kind of foreign language, I highly recommend you read the book. I do have the first 2 chapters available that you can download on my website for free. We will add that link. We were dropping links kind of as lives were going below down in the comments, and that kind of got a little cluttered. It was hard to go through afterwards. So we're pinning some comments to these feeds. And so there will be links about what we're talking about. And we'll add those links if we talk about something in there. So you can easily refer to it. It'll be in the pinned link for you to go back to. So again, allocations, owner's pay is one of those that we talk about. And in Profit First, we say, when your income comes in, then you have allocation days, and those get distributed out to the proper bank accounts, the proper plates of money that you're going to be working on. And one of them is owner's pay. And this is important because we go into business and it is hard, y'all. I am loving being an entrepreneur. I am loving running my own business. But it's a lot of work, and it's a lot of fun work, and I'm enjoying it all. But knowing that each allocation day for me, and I'm a 2 times a month, I'm a 10th and the 20th. The book talks about the 10th and the 25th. I'm a 10th and 20th just based off of how my business goes. It is nice to know that each time that happens, I am getting paid, and that is going to my household, right? I'm working a ton of hours as entrepreneurship usually happens. My kids and my family are seeing me work a lot. I'm in this process of balancing all my time. And part of the payoff of that is knowing that, yes, there is a paycheck coming in. And so what does that paycheck look like? Again, within the book, if you've read it, we've got some charts that are in there. And us as certified Profit First professionals, there's the book and there's all of that and what they suggest. And then there is taking that and identifying what your goal is for your business. So I have gone through all the process. I run Profit First in my business. And so I have my own allocation for owner's pay, and it helps make sure, it gives me peace of mind in paying my bills. And I know that when I go to work in my business is also working for me. So I have that peace of mind immediately. So owner's pay for small businesses, and I'm talking right now, I'm going to focus on the people who are not incorporated. I have found it's such a thing out there. So doing books for people, there's owner's pay and then there's a draw, right? And what are the differences between those two? What do they really mean for you? So owner's pay, for my terminology and when you're looking up, is when you're taking a salary out of your business. And salary equates to payroll taxes and doing all that good stuff. And then there is owner's draw. And so drawing is also a way to pay yourself, but those draws don't have your taxes coming out immediately. You're not having the company pull employment taxes out. You're not in turn turning that employment tax over to the government. And so therefore, your draws that are coming out, anytime you're taking money out or you're having the company pay for something on your personal behalf, is all income to you and taxable stuff. So those are really important things for small businesses to remember, is as you're drawing, just keep in mind, like, yes, you're paying yourself, but you have yet to pay the income taxes on that. So it's just really important for you to understand the difference there. I have had a few clients, we've gone in and they have done draws, and it has been draws in the form of all the money is commingled and they charge when they want to, and all of the expenses come into the bookkeeping system, and where this was personal and this was business, and we're trying to allocate all the things to the buckets. And so I wanted to come in here and talk about a system that will make it a little bit cleaner for you, and as you're growing, that it will allow you to grow with it and not try to backtrack out at tax time or kind of make a mess. So when I'm working with my clients, my preference is owner's draws, because you're not going to pay yourself a salary employment tax if you're not incorporated. That just usually doesn't happen. It's draws is what's happening, and that's fine. What I love about the system that I run in Profit First is my owner's pay is on my allocation days, and it is a set amount of money, and anything that I'm buying for me personally, rather than using my business funds to pay for that, right? Like, it's like, yes, I've got it here, I'm just going to tag it as a draw. I pay for all of that out of my personal account. And so it keeps it very clean and very separate. So I launched into this side gig of mine. It's no longer a side gig. I have to stop calling it a side gig. But I transitioned from my services being a side gig last year to this being my full-time day job. The whole time in that process, the first couple of years, I was just bringing the money into my personal account. I wasn't really big enough in paying for stuff, and I was tagging it as income. I had my invoices and everything was tracked that way. And then I would say, oh yeah, this was a business expense. But what would have been nice, and I talked about banking last week, I had my friend on who is at Valley Strong Credit Union here, and we talked about the importance of, if you are going into something and it's a side gig, but you have a passion for it, a lot of times those things are long running, right? Passions become a long standing thing. There's a side gig that you do, you maybe you got into, I won't call anyone out specifically, but I was huge into getting tagged into all the MLM things that my friends were in. Like, hey, I'm in Avon. Do you want to sign up as a distributor? Sure. Hey, that really wasn't a passion of mine, but it was something I was like, oh, I could try. Those kind of came and gone, but bookkeeping has been my passion. And I started this a decade ago, and I've been doing it for a decade. You might have this passionate thing that you're doing. You're saying, hey, it's a side gig for now, but assume that it could grow, right? So if you're doing this and you're like, this is what I like to do and it's what I like to spend my time on, those things typically will grow, because if you're good at it and you love it, there's really nowhere but up. And so highly recommend that we're splitting these things out from the get-go. So that means, again, rather than taking draws, so swiping, a personal card and buying stuff for your side gig or your business, doing all that. Let's keep it very separate from the get-go. Local regional banks, as we talked about last year, close. They have pretty low fees. And so setting up a separate account for you, business versus a personal, or if you're really side gigging it and you don't have a DBA, typically when you have a DBA, a business account is what you need. Have two accounts that you're operating off of, and start training yourself, start bringing your income into the one account. And when you're spending money on your business, take that money out of that account. And then as you're working through, if you've read the Profit First, start practicing, start implementing, even if you're little, right? So that's part of the scary part about Profit First is that's one of the objections that we get, is that they're worried about taking profits out of a very small gigs, very small business. But baby steps, right? So start paying yourself. Maybe it's just $10 a month, but you're in this habit of you're paying yourself something, and let's keep these things very similar. So if you're like, hey, I'm at this point where I'm going to do some draws, I highly suggest to my clients, and this is just my 2 cents on the bookkeeping end, right? So if you have a bookkeeper, maybe you're not good at books, or you have a bookkeeper, trying to fish through thousands of transactions, and these are personal and these are business, is really difficult. And sometimes a slippery slope to getting accurate books, and you don't want that. So to dial this all back in, you want to make sure to keep them separate. So have two different accounts and make sure that the money that you're making from the business is going into one specific account. That's the money that comes in, and business expenses are going out of that account. And then when it comes time to take your draw, rather than swiping personal expenses through that account and tagging as a draw, I highly recommend give yourself an owner's draw into your personal account and make those personal charges through your personal account. It just really keeps your books clean. It makes it a lot easier when you're ready to move on and hire a bookkeeper, that everything in there is truly an expense to the business, that you can really have an idea of profit and loss, whether you're doing receipts or whether you're doing a spreadsheet, but everything's very clean and very clear. Because as Deanna pointed out last week, if you're really small and getting started, if you set it up from the get-go with one bank account being your business, and that's all that it serves, that's a P&L for you. Your income is coming in and everything coming out is technically your expenses, right? So you can use that when you're smaller. It can become a very easy P&L for you if you're not ready for software, or you don't want to do spreadsheets, or you're really just baby stepping it. Such a great way to have financials before you even think you're ready to have financials, right? So do all that. And then when you're doing owner's pay, you cut yourself a check for what you need. So maybe you're not ready. You're like, hey, I'm not ready for paychecks on a regular day. Not necessarily what I'm saying, but if you need to make a purchase and you're like, hey, I need to make this purchase for myself, and I would typically draw the money out of the company, that's fine. Just transfer the amount of what you need into your personal account and make that personal purchase from your personal account. So just wanting to go on record, this is a suggestion, just keep it really clean up front, because when you go and try to, one, it's a behavioral thing. If you start this process in the beginning and you're training yourself to keep business and personal separate, that's great. Then maybe you get into incorporating. So say you grow this side gig and it is going amazing and it is time for you to incorporate. And when it's time to incorporate, that is a question for your CPA. So hashtag not a CPA, don't have that answer for you. But when you go to incorporate and you become an S Corp, one thing that some people are not aware of, and they're actually blown away when I talked to them. I had one client who had no clue they had been incorporated. You have to pay yourself a salary. And when I say pay yourself a salary, I mean you have to run a salary through payroll, and you have to pay the government their payroll taxes. That is a requirement of being incorporated. And you have to pay yourself a reasonable wage for what it is that you do. What is your education? How long have you been doing this? So another thing that lots of people don't know, and if you're incorporated, if you're an S Corp or a C Corp and you are not paying yourself a payroll paycheck, quickly talk to your CPA and get that changed, because that is a requirement. And the other thing to know about that is S Corps, yes, you have to pay yourself a reasonable wage through that, right? Because the government wants their taxes and they're going to get it. And you can also do draws through the company at that point, but the draws can't be skewed, right? So you can't be paying yourself like, oh, hey, I'm the COO of this huge company, and I'm gonna salary myself 10,000 a year, but I'm gonna draw out the equivalent of 60,000 a year. That's not allowed. So these are really important things to know. Is again, owners pay a salary. We're running it through payroll. We're paying Uncle Sam what he deems he is owed, and in turn, that salary and your portion of the payroll taxes gets to come off of your taxable income. So that's really cool. Your owner's draws go straight to you, no taxes taken out, no taxes going back to Uncle Sam, but still taxable at the end of the year. So I think it's really important for people to know that is some new business owners are not kind of really aware that funnels through, and you're going to end up owing taxes on whatever it is that you're pulling out. And I've had a handful of clients who've gotten really taken aback. I've come in to work with them. They got their tax bill and they're like, oh my goodness, why do I owe this much money? What happened here? And so just really important to keep that in mind. So to me, again, we're just going to kind of backtrack this all is if you're a small business owner and you right now are kind of just drawing willy-nilly, one thing that's really hard about that is you don't know what you're paying yourself. And I think it's really important that you have a good idea of what is the company handling for you, right? So again, this is why I like a very structured, if you've got living expenses every month and your company is doing very well and you're like, hey, I need to be making $1,000 a month from the company. Then set it up and monitor your profits as it's coming in, make sure that you're in that place and start making those transfers a draw to you and pay your personal expenses out through your personal account. Again, it's just really good practice to get into because as your business grows, at some point you are going to have to split those things. I still have one client who they were doing draws right out of the business account, personal draws right out of the business account for so long that we're still catching them coming through like they meant to turn them over. And it's been kind of like grabbing the thread on the sweater and trying to unravel it and be like, okay, where did it stop? Are we getting the last transaction? And still trying to clean all that up. So again, highly recommend. I can't speak enough. I've national banks. I've been a Wells Fargo customer for 30 years, but I've really found the local credit union here I've enjoyed. So if you have a local credit union and you're thinking, gosh, I don't, these bank accounts and these fees are crazy. Yes, they most definitely can be, especially if you don't want to pay the monthly bank fee. That's me. I don't want to. So I'm always looking at what's the minimum balance that I need to have. And the big national banks, usually it's kind of hard. That minimum balance, if you're not wanting to pay a bank fee, locks up your cash. Go to a smaller regional bank, check out the credit unions. There's some online options too, which I understand. There's one I'm familiar with, but I understand they're shutting down, so I'm not going to put those in there. But so those are, my Wednesday wisdom for you right now is look at how you are running your business right now. Are you taking a pay of some sort, and what is that? Have a true understanding of what your business is doing for you. If you're saying, my goal, it is so important to me as I'm building this business that the business starts to pay me now. Then let's find that, let's factor that in. What are you going to do to make that happen? Because small wins are wins and they snowball into big wins, right? So if right now you're like, I've got to invest all of this, I'm starting my company and I've got to invest all of this stuff. That's great. You've read Profit First and you said, oh, the allocation chart it's way out there. This is to be customized for you. And so drop a comment below. Happy to, chat with you or kind of walk you through questions you might have. Would love to do that and be a little bit more interactive in this group. But look at your goals for this year for your business. Are you wanting to get paid? If you are not, let's set up a process for that. Let's get you moving to where the business is starting to do that because it's baby steps. You got to do that. 2, make sure you are working on separating your personal and your business. 1, you'll have a true understanding of where your business is at for profitability, right? If you've got business and personal stuff flowing in and out, it really makes it hard for you to have a true picture of what's happening with your business. And 3, make sure how you're paying yourself, if you already are, falls in line with the type of entity that you are. So I found a great article about the differences here. I'm going to go ahead and summarize it on probably a blog post that I'll put up this weekend, I'll put a little note out on here and say, hey, that blog post is up and ready. Meant to do it for y'all, but it is year end and it is crazy January, and that's just kind of where we're at. So there's a lot. So I know it is, it's a wild day if you're here in California, which I am. Grants are due today for California. So Wednesday is a busy day. And in lieu of that, I'm going to keep this live very short because I know hopefully a bunch of you will come back on later. But I hope that this is helpful for you, because one of my passion points is if you are running a business, that business, the whole goal, right? We get into business is, yes, to serve and to provide and do all that, but also to provide for our families. And so let's make sure that we're taking those steps. We're identifying where there might be a little bit of breakdown. We're saying, hey, yeah, this process isn't really serving me well. I'm creating a lot of extra work on the back end. Like, how do we streamline this so that when you look at your business, you can say, yep, this is a viable thing. Another important thing about keeping all of that separate and making sure that you're identifying paying yourself. I had never thought about this as a side gig owner. Was at some point, you want to know what your business is valued at. So say in 20 years, right? 20 years, I'm going to want to retire. Selling my business might be one part of my retirement plan. I mean, I haven't decided. Maybe my daughter will want to come in and take over, or maybe my son, I don't know, but maybe selling my business in 20 years is part of my retirement plan. If that time comes, or say I move, or I'm like, hey, I'm done with this, I want to sell this and I want to change careers. Not going to happen. But say it did. Whoever you might want to sell your business to. So say like you've worked really hard and there's value in there, but you're just ready to move on. You have to be able to present that value to someone else. And if you don't have, again, this is for growing. So this is growth mindset here. If you're a brand new baby business, just keep this in the back of your mind to marinate on and work with your bookkeeper, work with your CPA on. But there needs to be a true accounting of the value of your business. And that means income and expenses. So most businesses, someone's getting paid to run it. And so if you're the owner and you're working in the business and you are not having draws or a paycheck coming out of that business, that's not a realistic financial picture. So when you go to submit your finances to someone and you say, oh, look at my profits, they're hand over fist, I'm rocking it here. And they're like, but you're not paying the person who's running the business. So these are just things to think about. So as we're growing and we're building and we're talking about growth mindset, and we're looking at cash strategies and just the whole balloon, all the little things, and we're going to talk about, small pieces right now. Keep these in the mindset is that we want to grow our businesses, and as small-minded as we might be in the beginning, and I was an offender myself. I was like, hey, it's a little side gig, a little extra spending money. But because I love this so much, that side gig and extra spending money turned into a career. And I still, like, every day am so blessed and so amazed at where this has taken me and where it has gone. And the fact that I could sell this. Like, I had one of my financial partners was like, hey, if you decide to go out of business today, I would buy your business from you. And I'm in the financial world, and it became so clear to me is when we're in this building and the grind and the hustle, that we're not always paying attention to what it means to grow. And so that's one of the things that I want to serve this community with is sometimes, you might be like, oh, Christina, oh my gosh, stop talking about paychecks. We're so far away from that. Maybe you are. But maybe 2021, at the end of 2021, if I look at where I was at the end of 2019 and where I was at the end of 2020, I could have never predicted where I would be at. I could have never predicted all of the decisions that I made, the pivoting, the interest, the where I could serve someone. You just never know. So that said, because I covered a lot, and it's because I didn't have notes and bullet points in front of me. So for those of you where you feel like I was all over the place, apologies, but just really passionate about this. So if you have questions about owner's pay versus owner's draw, versus what entity are you? Drop them in the comments below. I will get back to you. Again, today is like the day that we have to apply for some grants here in California. So if I don't get back to you today, I will for sure this week. But I want you to start thinking about things. And if you have, share your insights below. Does this speak to you? Are you a small business owner who has thought, oh gosh, I'm not going to pay myself? Does this give you food for thought? Like, what are we looking at? Share it below and marinate on it. And again, profit first, like we talked about. I'm going to learn this right here. Where are we at? No, don't want. Right there. This book right here. Highly recommend it. It just has such great foundational information for you. And then how do we take that and baby step into it, right? Like there's got to be a starting point at some place. So I highly recommend that. Stop and think. Start thinking about, one, separating your income, and two, paying yourself. Let's talk about that. What does that look like? Maybe for you, baby business owner, maybe paying yourself means, hey, I'm going to do a draw. When I first started working on the side gig, I was doing other things, and the side gig didn't really have to pay my bills, right? So I was blessed in that aspect. But I could still do a draw and say, I'm going to take my family to the movies, and my owner's pay was entertainment money for the family for a week. Just think about it, because sometimes you need to see the celebration. You need to have something to hold on to keep you going. So if that's you, start thinking about this. Again, if you have questions, because owner's pay can be very complex, understanding what you should do, what you shouldn't do. And sometimes there's that blurred line when you're a sole prop of, yes, you can draw and you can do all these things, but how can we streamline that to make your life easier so that when you do grow, and when you do need a bookkeeper, we've got a system in place that's easy for them to take over. They're not trying to clean up a bunch of mess and trying to figure things out, but you've got a rocking system. Your stuff is all separated. Your CPA loves you and gets your taxes done on time. Your bookkeeper is amazed by you, and you're not having to, pay them to deal with the chaos that is. Let's just think about those things. So that is, we'll call it Wisdom Wednesday. Why not? Other thing about that is it is coming really close to February 16th, and that is the launch of Permanently Profitable. So I am going to be launching a digital course that is going to take people through a cash flow management strategy. And this course is going to be based off the book of Profit First. So we are going to take the book, if you've read it, or someone who has read it, loves the system and thinks, oh boy, this was great. They love the training wheels, but they want to take the training wheels off, or they don't understand how to put the training wheels on, right? Because some people, if finance isn't your game, that's fine. We're going to take Profit First, all the foundations from the book, and we're going to walk you through for 7 weeks how to implement it in your business and to customize it for where you are at. So you've read the book, you've seen all the processes and the strategies, which are amazing. And we're going to give you some additional support, some additional training, some additional, some homework. It's going to be interactive. There's going to be things for you to do over 7 weeks, so that at the end of that 7 weeks, if you're doing the work, and it'll be work, but it won't be too overwhelming, that at the end of that, you're going to have a system in place that works for you, that is customized for you, based off of your goals, your dreams, your ambitions. So if you are interested in that, sign up for my newsletter. It's on my website, springsteadsolutions.com. If you're watching this in some place, I have a Facebook group called Permanently Profitable. I have a business page on Facebook called Springstead Solutions. This is going on YouTube. I've got a YouTube channel. But that cart for that course is going to open in the beginning of February. We're going to launch February 16th. It's just really good timing. It's enough time for you to kind of get through the end of the year, do an assessment of where you're at, get your stuff ready to go for your CPA, and then enough time for you to stop and think, okay, now it's time to look at 2021 and identify what are the changes I said I want to make and how am I going to move forward. So you'll be able to take that with you. You're ready to make some changes. Highly encourage you to sign up to learn more about the course. It's such a bridge, like I said, between reading Profit First, wanting more support, but maybe not being able or not wanting to hire a professional, right? So you're a DIYer, do it yourself. Someone said to me, what's a DIYer? And I thought that was pretty common terminology, but apparently not. So do it yourself. If you are like that and you're like, hey, I like to do my own finances. I don't always understand it, but I want to know how to understand it. This is for you. Please sign up to receive the information. You can get a little peek. Like I said, you can read the first 2 chapters of Profit First for free. They're on my website. Also, there is a link to do the instant assessment, which is talked about in the book. It's got a little bit more instruction there for you, and it's a pretty little worksheet. So feel free to download that, walk through it, and then if you have any questions, DM me. You can send me a message through my website, Springstead Solutions, or drop a note down below in the comments, and I'll be happy to get back to them, me or myself. So I look forward to seeing you back here next week. The topics are going to be somewhere in the debt. If you have any more clarification on owner's pay, allocations, next Wednesday is my allocation day, so we're going to touch a little bit about that and review the owner's pay. So I'm so glad to spend these Wednesdays with you. I look forward to this community growing. I appreciate you growing with me, and as I'm looking to bring you content, if there's something that you have questions about, drop it below. I really want to bring and serve good information, especially for people who just don't know. And so would love to know what you want to know about. So drop the comments below, watch this video later. Please feel free to share it. And I will catch you back here next Wednesday at 11 a.m. Pacific Standard Time, either in the Permanently Profitable group, on the Springstead Solutions page, or on my YouTube channel. So have a great day, everyone. For those of you who are in California filling out your grant applications, best of luck getting funded round 1. And I will see you all again later. Have a great day.